What did you make of this?
Well, just what you said. I don't understand why investors are concerned. If you go to any conference these days, you talk to any pension fund manager, what they want is private equity. And Blackstone's in the process of raising a $20 billion fund. It'll be their biggest fund. It does not seem like these guys are hurting for cash, and yet the market didn't like that number.
Certainly interesting to hear what they say on the conference call. And as you know, traditionally, the numbers come out and people sort of parse through them a little bit. What they really want to hear is what is Steve Schwarzman and now John Gray, the new president, what are these guys going to say about the opportunity set out there? News yesterday on the Bloomberg, they've got $10 billion that they're putting toward direct lending. What are the drivers here for you?
Well, I think the thing they're going to be listening for and worried about is something that Jonathan Gray said yesterday, which is that he's worried about tariffs. He's worried about the trade war with China. And he said that if we do more of this, we're going to raise the cost of capital in the U.S. And that's a big deal for private equity. And that could be what's moving the stock even more than maybe the little bit light on assets under management.
For the Luddite question over here, is it also any of it competition? I mean, there's been so much money raised in other firms, too. Like, how does that play into it?
Yes, definitely. So that's the flip side, right? On one side is that so much money's coming into the guys. They're the hot asset. The other side is that the dry powder, which actually went down a little bit for Blackstone. They put a little more money to work. But, you know, at the Milken conference, where that was a question, you know, don't you guys have too much cash? And a lot of people, Leon Black said, you know, we could never have too much cash. That sounds like bubble.
Right. It definitely does feel like that. And you raise a really interesting point about the dry powder, because they're putting a lot of money to work. One of the questions investors are going to ask is, how much were they paying for those deals? Because more money leads to more competition. And so if they are getting into these auction type situations, especially on the corporate side, valuations being what they are, they may be paying very high prices for these deals right now.
Right. And with interest rates going up, it's going to raise costs. It's going to maybe harder to make those returns.
Right. And people count on private equity. The reason it's so attractive to investors is because they get these multiples on their money. They get sorts of returns they just can't get anywhere else.
Well, also to that point, I mean, we know that P is also, particularly Blackstone, going into different kind of products to appeal to different kind of customers, especially more on like a lower end base, right? Like, where are they in that transition?
Well, they're doing more of their lending fund, GSO, right? That's a direct lending product that, you know, they probably will do better as interest rates go up. They'll be able to get more for that. And they're trying to broaden out to a lower investment class, or a lower type of investor. But it's, you know, there's so much demand from the pension funds that they don't really need to broaden out too much.